Welcome back. Peter Kovalski is portfolio manager for the Dynamic Financial Services Fund, which has gained over 36% year to date.
He joins us now with his outlook and to discuss why he thinks the peak in credit problems is at least a year away. Peter, welcome.
Thanks.
So the market's getting ahead of themselves, especially considering your last statement?
Yeah, I mean, I think what we had was kind of a resurrection bounce here where the end of the first quarter, most banks were considered dead. You had rhetoric coming out of Washington about potential nationalization. That really spooked the markets. Since then, I think there's no talk of any large bank being acquired by the government, and I think that's the rally now is coming off of a very low base.
And you think those lows were back in March, correct?
Yes. Mm-hmm. Yeah, I don't think we're going to hit those lows again. And what I believe is going to keep the stocks up here is the fact that the capital markets have finally opened up for them. So banks that are in desperate need of capital have been able to raise capital in this environment. And as long as that window is open, they'll be able to survive.
And I just talked to Dan Fuss. Lori and I did. We talked to Dan Fuss a few minutes ago. Banks have enough on reserve, do they not?
It depends on what your scenario is for the economic downturn, how severe it will be. They may need additional capital if we have an extended period of a downturn. So I still question whether we may have to have another round of equity raise. But as long as the capital markets are flowing, that should not be a problem for them.
What is your advice for investing in financials now? What do you look for?
Right now, it's been a very difficult environment this year. It's been very volatile. There hasn't really been one sector that has really been the lead. So I would say the best thing to do is keep very diversified across the sector. Invest in banks, insurance, brokers, asset managers.
Goldman Sachs, JP Morgan obviously being touted as the winners in this scenario. Will that continue?
Yeah, they've let out of the recovery. I'm not sure if I think you'll have the laggards come. You're already starting to see the beta trade that's been taking place, where the investors are going to the lower quality names and getting much higher returns in a very short period of time.
What's the key right now for investors? Is it patience?
Yeah.
It's kind of hard to say that given this environment and how volatile it is. But do you tell investors just wait?
Yeah, well, it depends on when your time horizon is. If you have a 2-year time horizon, you should be buying now. I wouldn't be fully invested now. I think we will have some type of a pullback here. What I'm a little concerned is, as we alluded to, I still think the credit cycle will not hit bottom until probably a good year from now. I think the institutional investors will not be that patient, and then they'll quickly take some of the gains that they have off the table.
Do you want to see the Fed continue programs like TALF, the public-private investment initiatives?
I don't think that's as much needed now. I think, like I said,
But when you say the credit is going to be expanded, or the credit problems are, the bottom is still a ways away, what is the solution there?
The banks can manage from here on out, I believe, as long as the capital markets are there for them to dip into. What we're seeing now, the problem with housing market, that's sort of becoming last year's problem or the last problem. Now the economy with slowing retail sales, that's affecting commercial business, and with unemployment, that's affecting consumer finance. So I think what you're going to start seeing is more of a broad-based deterioration, not just home-related.
When are we going to start to see an increase in consumer spending?
I wish I knew I'd be doubling down if I knew when that was going to happen. I think what's going to needs to happen is some stabilization in the employment market before that's going to happen.
All right. So, Peter, what about the exchange stocks? I believe you told our producers those are some of your favorites in this environment.
Yeah, I think those are the ones that I think will help lead out of the market. The reason I I like those is the fact that they don't have a legacy loan portfolio that the commercial banks have. So as the capital markets start to improve, more assets start moving back into the sector and volumes start to pick up, they should be an immediate beneficiary of it.
Peter Kovalski.
I'm sorry, if I could. You like Greenhill, right? The corporate financial advisor.
Yes.
Why?
Yeah, I think they are one of the few that are benefiting from this turmoil we've had in the investment banking market. They've increased their number of senior managing directors pretty substantially this year, and they've been able to kind of get the cream of the crop right now as those individuals are leaving banks that were under the tarp.
Peter Kovalski, portfolio manager at Alpine Mutual Funds of Purchase, New York, joining us today. Peter, thanks.
Thank you.